there is this green line that you use in highlighting the retest back
Mm-hmm.
that break the blue line up before we went down to daily to
Okay.
check what was performing there.
Okay. So
So
let me
I
take it.
very well.
Let me take it
Okay.
again. Okay. So we are still on precision support resistance, and I'm saying that this is a price or internal zone that we frame within the general or normal support resistance zone. And this is where we are finding an edge that off that price, the moves are likely to happen. Okay, so um, up onto the last session, we were dealing with the buy side and sell side. We're dealing with the sell side precision support, and we're looking at we're seeing price constantly going below the blue line, and then we were seeing sales. Okay, um, so there is one thing I want to share with you guys here before. Is Uchenna back? Uchenna, are you here?
Yes, sir.
Good. So Uchenna, let me show you something. You know, the simple logic is that when we get a close above the precision support like this, like the shaded part here like this, it means that the market is telling us, I want to buy. So see it that way. And when it comes below it like this, to also close like below it, all the things happening below here, it's a sign that I want to buy because of this indication, but I want to sell first because I've come to also close below. Because all this is happening within this session or frame of price action. Good. So the normal thing we should be seeing is that around this blue line, there is a break of structure. What is a break of structure? Off price going above, up here like this to close above the blue line is a bullish move. Frank, do you understand that?
A bit, but I think as we move on, I'll
Okay,
grasp.
you understand that, but you understand that it's a bullish move. You understand
Yes,
the
but
bullish. Why is it a
yes,
bullish move? Because we are seeing high,
the
high,
highs there.
low, high,
Yes,
low, high.
high.
This pattern is a bullish move. This happened
So that's because of the region,
i- not
the
really
highs in the
because of the
region.
region, but when you see that happening for a consistent session, like for consistent sessions or number of times, this something like this happen. Second, this is a bullish market.
Yes, please.
Perfect. Now, this is happening high, low, high, low, higher, high. Then, at what point are we going to say that the market has shifted or changed behavior to a bearish market? We want the last lower high to be taken out. Okay, so now let me do something here. The price action will tell us that if we have a high, a low, high, low, high, we have it like this. What is our valid? So that is the next thing that we're going to answer from the slides. What is a valid high and valid low? and what is found below swing lows or above swing highs. This is a little bit complex, but what we find there is a distribution of liquidity, a deposit of liquidity, or a grab of liquidity. That's what happens there. But we're not even going to that right now. So, what is a valid high and a valid low? A valid high is a high that takes a previous high out. This was a previous high here. This new high that was made took this previous high out. That is what we call break of structure. Am I right? Am I right?
Yes, you are. Yes,
Perfect.
yes, you're right.
So the moment you see price taking out a previous high and breaking structure and getting us a new high, that high is a reference high or is a swing stroke reference point or high. Okay, so anytime you get a new one, so now price drops down and gives us a new high. This new high is also called a swing or reference point or is a swing high. Why? Because it took a previous high out. And that is the normal progression of a bullish market. So anything that is happening between this swing high, and now let's come back to the lows. The lows. We have a low point here. We have a low here. We have another low here. Okay. And it is from this low, this one gave us this low here. It's from here that we got this high. So the current swing low is this. Within this structure is here. So this is our swing low. Swing low or reference low within this bullish market. So this is the high, the current one. Okay. We have another one here. Here and here becomes another one. Here and here is another one. Are you guys getting my point?
Yes.
Yes.
Perfect. So my question is, at what point are we going to say there is a shift to a bearish market? So within this swing low and swing high or reference low, reference high, anything that is happening in between here, okay, anything that is happening here is noise. If price drops down and gets here and does not sweep this low out, it's noise. We are supposed to buy from here. There is not break of structure yet. Anything happening here, there is not a break of structure. It's not a shift in market structure. It's not a change of character. It's only when the last swing low is comfortably taken out. And the concept we are learning is that we first know that of or from the knowledge of precision support resistance line that we drill, we want to be selling when price is below this. But it's not just like price is below. We need indication. The indication is that there should be obvious body close below. This is, you see this daily candle. This is a daily time frame. You see this candle. It's a big close, an engulfing close below. So this at this point, we have a sign to be selling. But before that sign came to us, okay, because already before we got even this close below the blue line, we were all above and we were in a bullish structure. High, higher high, lower high, higher high. Okay, we're in a bullish market. Okay, so now we get a close below. It is telling us that now we can try to find sell setups. But what I'm saying is that this bullish structure that was given us above the blue line here, market structure is telling us that that has shifted to a bearish market. Why? Because the last low that gave the high, reference high, has been swept. The moment you see this happen, okay, has been taken out. The moment you see this happen, this is a change of character one, and it is a break of structure. So once you see this happen, you can call it impulsive move. We need a corrective. Uchenna, is this difficult to understand?
No, sir.
So the good news is that if this happens around where you have a precision and support line, then you have to be thanking God because you are about to make money. Okay, if this happens around where you have a higher time frame or major support resistance precision line, you have to be thanking God that you are about to make money. And in this situation, what you do is because there is a break of structure and you are expecting a corrective, and you also know you only be selling more when price is below the blue line. What you do is you pick your Fibonacci, measure from the high that it gave us to the low or to the point that it got to before it's making a pullback. Then what do? You look for price at above 50%, which is premium because we want to sell. Now, this is the ideal situation. The issue is that, and let me mark the 78.6%. Let me put the feedback. So 78.6%. Normally, that's the sweet spot. That's where I like, especially when at that point I can find another internal precision support line there. I like it so much. So let me make it a red line. Now, I want to be waiting for price at that place so that I will sell. But normally or sometimes, price will not give you that. It will only give you either equilibrium or sometimes 38.2%. But the good news for us is that we know that though we are expecting price to come to premium, we know that as long as price stays below this blue line, we should be selling. Are you getting how I'm combining these two concepts?
Yes.
Yes, please.
Perfect. So price is still below the blue line, though it has not come to premium where we will have a very sweet entry. It has not come. Are we supposed to allow price to keep selling? No, we have to find an entry. Now, how do we find an entry? All you need is price should be below the blue line. Because from the back here, consistently for 4 times, below, sell, hit, reject, below, selling. We have been seeing it. This is just deceiving us. It's telling us it wants to buy, so it closes above, but it comes back to now close below. So we're still selling until it goes to close above. We will not give up. We'll keep selling. Okay. So at the end of the day, we get a 38.2% or close to equilibrium retracement, which is good. But the most important thing I'm throwing to you guys is that look for rejections and engulfing. So let's say you are using this daily time frame to monitor. Okay, let's say you want to be using daily time frame to monitor your setups. Then when you see the things happening, then you can go to smaller time frame to find entry. So if you are monitoring this and you now see price coming up, and it gets here, reject one day, the first day, second day, go up, reject. all is still below blue line. Third day, go up but still reject. Fourth day, go up but still reject. And the next day, which is let's say the whole week, now price engulfs everything and even engulfs this green candle. You see, that green candle that was giving the problem engulfs it and closes. Because internally, where I've put this line, we can frame an internal precision support resistance line there. But I don't want the lines to be plenty because we are just studying from the higher time frame. But if we want to take this trade, we will go into because that's why top-down analysis is important. We will go into the smaller time frame, like 4 hour, 30 minutes, 1 hour. You will find that this small line I've drawn here is a precision support resistance line within this bigger picture, either on the 4 hour or 30 minutes or 1 hour. But we don't want to go into that yet. So let's say you are just waiting. You see rejections and you see an engulfing. See how price retested that line I've just drawn. Exactly. The thing is working. The thing works perfectly. If you get it right, the way is nice. You enter the trade and you are in profit. Okay? You are just in profit. You enter small loss, you are just in profit. Okay? It just engulfed everything and then retested. Boom. Look at the sweep. So your first TP for this trade will just be it's expecting it to sweep this low. You got it. You get it. Sweet. This is a sweet trade from here to here. Let's say you waited for the daily time frame to give you this confirmation, and you found an internal precision support resistance within this zone, which is the line that I have drawn there, and you take your entry from here. You take your sell from here because price is below the bigger blue line above here, and it is still below your internal precision support line. That is it. You get up to here, where? Somewhere here. But your TP1 was hit without any struggle. Is it coming small for now? Is it coming
Yes,
now? Perfect.
yes.
Good. So now, one thing I want to throw to us is that the fact that price did not come to premium does not mean it will not come. So let's observe what happened. Let's extend this premium yellow line up. Observe. What do you see? You can see that after it did the big selling, so it sold, but let's observe when it sold, it took previous lows here. It broke structure. Then from there, it kept coming up. What do you think this buy? What do you think the target was? That's why I said always the precision support is drawing price to itself, and it will use it as support or resistance or buying or selling power to distribute. Okay, it's a very strong price point that when you identify, and I'm still investigating, researching to see what exactly makes it strong, because you can find many, but not many can be more, not all of them can be very strong. Okay, but this one that we are using to study is very strong because as price was buying, it just bought to it again. Okay, so now it comes to it again, sweeps that 38 retracement, boom. So let's say let's say the trade did not come to premium and you still have your FIP on. Now, did it come to premium now or not? Tell me. When it did the pullback, has it come to premium or not? Tell me.
Yes.
No,
Not?
no.
Yes. Yes,
What?
it's at premium.
Yes.
It's 17.8.
I'm just measuring from where we had the break of structure and I've left the FIP on. For how many years? How many years did it take to come back to it? This 2011, okay, the same 2011. So let's say from somewhere January to January to I think it took like 1 year. My God, this is crazy. Okay, yeah, and that's because this is daily time frame framing. It came, you see, exactly at the 78.6%. And you see the red line that I put there. So let me show you something small here, guys. You see this daily time frame. Why did I put this red line here? I put this red line here because it is the same place where I saw this sell candle. You see, where you see this big sell candle with the body, where it took off the body. Okay, are you observing the body? Forget about the wick, but the body. Okay, that is the impulsive move where it started from. Boom, I put it there. Now observe. Anytime price get to the red line, rejections, rejections. Now see another engulfing below it. Okay, close above it, but price comes below it. And look at this. This is the current price. This is the indication. Close below. So that's why I put that red line there. And that is how you can identify precision support. Okay, where the impulsive move takes off from. Where is that? Where did I write that? I think I wrote it somewhere here. Where price has impulsively been distributed off. Okay, here. Here. The red line. The red line. You see, bearish candle. Bearish candle. And that same place, when you measure on the FIB, it has confluence with 78.6%. That is a powerful entry. So when price kept playing, in future, you see, it came back right red line. So for me, if I have this marked on my chart, so what I will tell you, as long as price is below the red line, sell. But when price closes below the blue line, it's a more sell. Do you see me saying that, typing that on the chart when I send setups? Good. So the entry is as long as price stays below the red line, sell. But a more sell is as long as price is below the blue line. So you caught that entry, it did not give us here. After months, it now gave us that entry. And let's see how it played out. This is an entry without any loss. Boom. Now it came engulfed below the blue line, retested, stayed below the blue line. I'll hold that trade. I'll never close. Boom. Kept on, kept on. Now, the intention for this sell was that we will have a new low so that we will keep printing lower lows, lower highs for the bearish pattern. But it only came here, did not give us a new low, and pulled back up. So it pulled back up into somewhere here. After that, into somewhere here. After that, price has not come up again on Euro USD. From here, now it now gave us the low that we wanted. You see, boom, it gave us the low that we wanted. Okay, so it fulfilled the bearish structure. After giving that low, now it pulled back to retest, drop down again, pull back to retest, drop down again, and then This is where we are. So now let's study again. We were studying this precision support line above here. Now let's study the black line, the precision support line that we had here when the buyers were in. Buyers were here. So just identify the thing on your chart and then backtest it. Study it because it's a line, it will cut through to the current price. So study it and see how the current price action will react to that line. You'll be amazed. So we have buyers here that are pushing price up. Frank, what will happen if the buyers get weak? If these buyers who are sitting here, if they become weak, what will happen? Mr. Coyote, what will happen? What will happen?
Are you talking to someone? You are generalizing it.
You, yeah, all of you. What will happen if the buyers
Seller,
get weak? Buyers are
seller will
here.
seller will take control.
Perfect. So now, how do we know sellers will take control? They have to tell us, but through indication.
Yeah. To close above.
Good. 2 times here,
Good place.
sellers push price up, sellers push price up. Now let's see. Now, the third time, price hit the same black line, move up, hit and close below. What does this tell us? It is telling us that sellers have become weak and buyers have the intention, buyers have become weak, sellers have the intention of taking over. So this is the first time we get an intention to go below the black line to sell. Because off here, price just hit and go up, hit and go up. But here, it hit, go up small, hit and get a close below. Are you observing that? Are you seeing that?
Yes, sir.
Good.
Yes.
Now, so this is the indication that we want to sell. But when you get the indication, and notice this is the first time is giving us that indication, because around here, no, it just hit and go up, hit and go up, no close below, so no indication. Now we have indication. This is the first indication. So when you get indication, what do you expect? Is it not corrective or pullback or corrective? So once you get this indication, in corrective, price has been buying. So let's observe. We come here, just be checking the black line. We come here. Now, price come to the black line again, and this time, see the bearish body. This is a daily time frame. It closes below. The moment it closes below, so this is the second time it's giving us the intention, close with the close below. Well, it closes below, move up, comes, go up. As long as price, you see, the moment price keeps staying close to the black line, now you have to start monitoring or looking for break of structure. Okay, start looking for a bearish break of structure around the black line. Now, price comes. Oh, this Zoom thing, guys. We have 10 minutes, but I don't know. I'm feeling very happy explaining this. We have one last thing to do. I think we've been using all the time trying to backtest this, but we have one last thing to do. If you don't mind, we can use Google Meet to just continue quick for the last session, if it closes. But if not, too, we can continue tomorrow if you are tired. So I'm just throwing it to you. So price come back to the black line, move up. Now it gives us another bearish close below the black line. Can you see that? So
Yeah.
watch well. Oh, you see here there was no close. Here there was no close. It's only here that we get
Yes.
the body close.
Body close.
This is the
Below.
first within this range here. This is the first time. Here it gave us intention. Second time it gave us. So you just have to. Sometimes you'll be tempted to enter the trade early on the first close here, and you will be in a loss, no problem, and you even close on loss, no problem. I do it. Sometimes I don't. I'm not too patient, and I'll just enter the trade because this is daily time frame. So I might be getting the close on maybe 30 minutes, 15 minutes, 1 hour, and I'll take an early entry. Okay,
Yeah.
and it will put me in a loss, no problem. You can see this on what do you call it? Step 100. The one time I think you should remember we did that setup and the thing bought. It went later. Now it's selling.
Yeah.
Yes. So it will come back. Now it comes back and give another close. This is the time for you to take a new sell and recover your loss. So it may take days, but the good thing is that what is nice about this precision support line is that if the buy or the sell fails, you have the chance to frame the opposite entry. Because if this one fails and it goes above, it will always retest and give you an engulfing or indication to go to the opposite direction. And that's what I like about it. So your recovery rate, if you only want to be aggressive, you can recover if you even make loss. Okay, you can always recover. So this is the indication again. From here, we get a sell, comes up. This green candle is showing that price wants to buy. Therefore, we don't look for sales again. You see how big it is, and with the
Yeah.
next one closes above. This is telling us above it we are buying. So you don't joke with it. Allow it to buy. Let it do what it wants to do. So it keeps buying, buying, goes to do what it wants to do above there. Now it comes back again. Comes back, no close yet, goes up, comes back, close below, goes up, close below, goes up, engulfing, engulfing below it. Are you watching that? So this is like the third or fourth time we are seeing this indication. So it's patience, just wait. When it finally accepted that it wants to give you profit or money so that you enjoy with your family, look at the move. Okay, when it finally accepted that your strategy should hold, look at the move. Look at the move.
It becomes bearish.
Yes, look at the move. It just sold big time. Look at it. Okay, so a patience is one of the key things that we should have with this thing. You see, from here, boom, up to here, it kept selling. Good. Now, let me show you something. Have you guys seen where I've put this blue line?
Yes.
Let me even take the black line off. Price, this is the first time price is hitting the blue line. And then quickly it gives us a very big buy. Have you seen that? So on the PPT, I wrote that look for where price has impulsively been distributed off. Okay, where a big move has happened from or off. Off this blue line, price buys. You see, up, up, up. So I just picked that blue line and then put a line there. Now let's keep watching. It means that above that blue line, price will buy. So what will happen if price is below it? Would it not sell? It will sell. That's the concept. So let's see if it will hold. Now blue line, price comes below it. We see a sell. Now price goes up. Price goes up. It hit the blue line and rejected and sold. This is where I will be confident in the blue line because price came from up and hit it, and it bought in the past. It bought. Now price goes below it. Now it comes to hit it and then it sold. is sells. It means the blue line is being used as both support and resistance. So I will use it as a magic line. Now, a close above it, so it buys, close below it. This is where the logic comes in. Here, we get a bullish close above it. At the same time, we get a bearish close below it. What did I say this means? It means market is saying, I want to buy, but after the buying, I want to sell. Now, price buys small, comes down, it sells. Goes up again, another indication, bullish close above it. Bullish close above it, bearish close below it. What is it telling you? I want to buy and then later I will sell. So just allow it. If it goes above it, don't do anything. Wait. As long as price is above that blue line, we look for buys. If it's below, we look for sells. Okay, look here. Price engulfs, bearish engulfing below, sells. So off from this point, anytime, because we have engulfed and sold here, we have to monitor this blue line because that is the most current one. Anytime price is below it, we have to sell. And anytime price is above it, we have to buy. So price hit, drop, above it buys, above it buys, below it retested it, sells. I hope you guys are watching. You see below the blue line, sells. See that drop, sells. Below the blue line, let me stretch it up. Now this is the current activity on Euro USD. Euro USD has been bullish, but where did it hit? Did it not hit the blue line? Guys, did it hit the blue line? Yes.
Yes.
Did it reject? Yes.
Yes.
Do you see an engulfing pattern happening?
Yes.
Yes. Do you see any break of structure on the daily time frame?
Yes.
Perfect. So are we supposed to be looking for sells on Euro USD now?
I'll
Why
say
are we
yes.
supposed to be looking for sells? We look for sells as
Because
long
of the
as
break of
price is below this blue line.
That blue line. Yes.
As long as
Yeah.
price is below the blue line, we look for sells. The moment price goes up and closes body above the blue line, we have to be looking for buys. That is it. So this first gives us the idea what we should be looking for. Now let's go into details with this Euro USD, with this precision support resistance. Let's go into details. Now, from down here up to that up there, we have been bullish, right?
Yes.
So we want to look for the last swing. So we are bullish. High, low, higher high, lower high, higher high,